afternoon. This is Lance Bryce with Thrive Mortgage. We are going to move this update call to Tuesday. Mondays are just too darn busy. People are catching up with what they've done over the weekend. It gives us an extra day to see what the markets are going to be doing for the week anyway. Mondays are very reactionary for the markets. And boy, did that prove true yesterday. We saw a 1,000-point sell-off on the Dow yesterday. We're looking at pretty much the same today. The Dow is currently down 838 points on this Tuesday, the 25th of February. Hope everyone had a great weekend. All the news is around the coronavirus and the potential for it to slow down global markets. As we have seen a spread to Italy, we are seeing a 2.5% mortality rate. That is significantly higher than the regular flu. You know, every year as a country, we have around 26 million folks that get the flu. We'll have around 14,000 of them die. That's around 0.5%. We're seeing 2.5% fatality rates with this coronavirus. So it's scary. The markets are still trying to digest it. And as a result, we are seeing the markets sell off in anticipation of a global slowdown. If that does not pan out, we're going to see a pretty significant snapback in the other direction. I expect you'll probably see some folks buying this two-day dip, which will put some upward pressure on rates and downward pressure on bonds, maybe for the remainder of the week, unless we get more bad news with regard to how this virus is spreading. As we have said repeatedly, volatility is the order of the day with regard to interest rates. We are seeing them at four-year lows currently. You have to go back to November of 2016 to find bond prices where they are now. We just don't see mortgage rates dip much below where they are. When you look at the last significant dip, or all of the significant dips over the last couple of decades, you did not see interest rates, even though the bond market may have benefited, you really haven't seen interest rates fall much more than an eighth from where they are right now. So it seems to me the majority of the risk is to the upside, given that fact. Even if we see the bond market continue to gain strength on the Dow weakness, it's not going to translate into appreciably lower interest rates if history is our guide. In any event, hope this is useful. Grab these rates, lock them in, and enjoy what should be a very strong housing market despite the concerns that are out there. This is Lance Bryce with Thrive Mortgage. You can reach me online at brycehomeloans.com or on my cell at 210-260-9660. Hope you have a great week.